Welcome back to the channel. We're going over the SP 500, the Nasdaq 100, exactly how the market is moving, what to expect going into Monday morning, most importantly, and how to make money in this market and what to expect. Because honestly, if you've been on the channel, we've been calling exactly these moves. Now, you've been getting some of those touches, but you're still following the trend, and we're setting you up to get winning trades every single day. Before we get into that, I have to ask you to consider doing two things. I've been posting videos almost religiously every single day about the market, trying to get feedback from you guys, specifically what you want to hear. So leave a comment down below about specific areas of the video that you want me to focus more on, and I'll actually try to pivot the videos towards that way, but still going over the bulk of the video. So consider liking, consider subscribing, because it keeps the channel alive. More videos are coming. So going back to the Nasdaq, this has been our bread and butter. When it comes to the SPY, in my opinion, movement's been a little bit not as interesting. For instance, on the past week or so, you've been trading in this overall trend. Very stagnant, if you will. Going to the Nasdaq futures, I believe things have been a little bit more interesting to watch on this side. Yeah, you're still in that trend, but look at the overall movement here, and it's giving you better direction, in my opinion, and following these key ranges very, very easily. I'm sorry if you can hear my son in the background. He is listening to Ryan's World as we speak. But let's get into this. So what we're going to do is go over these key ranges and kind of the areas we've been battling on the week. Now, what we've been seeing is this key rejection off of 12,000. And what we have also seen is a very nice bounce around the 11.75 area. You have gotten below that, testing those 11.4s for a very slight amount of time. However, I would consider a bulk of your movement to be sitting in this range specifically on this week. This has been where we've been at. That's how you've been trading. Now, does that mean that's how you're going to trade next week? No. That's why there's a lot of things we need to be talking about here specifically. Going into this next week, I want to highlight a few things. We've talked about the Fed and how they're pricing in supposedly a full 1-point hike, right? This has been kind of the going theme as of lately, right? That we were expecting a price in of a 1-point hike. Scratch that out. Right now, it's looking more and more like they're pricing in a 0.75 all the way to a 0.5 ratio. Now, if it somehow came out to a 0.5 on the actual hike, which I highly doubt, you will have a massive bullish uptrend and you'll probably start bouncing pretty vigorously. Even with that 0.75, I still see some bullish activity, but it's getting priced in right now as we speak. What does that mean? Okay, so during that 1-point hike, which we mentioned, you saw all of this downside where you double bottomed at 11.4. And I made sure to tell you in those videos that what are we looking for? If you're below 11.75, you're looking for the retest of 11.4. If you break above 11.4, you're testing new lows because this 11.4, 11.35 area has held up for basically 3 weeks, give or take. You've seen it hold here, it's holding here, and it held back here. That's why it's so important as we speak here, and that's why you got to be looking at this area. Now, what did I also say though? What was I continuing to say? You're not looking to get into short positions down here. That's not where you're looking to enter these. If anything, you're trying to enter these when you're at a resistance. So when you come and retest, when you're coming back up and you're retesting, yes, you'd get stopped out. However, this is giving you the best risk to reward because yeah, you pop back up, you get stopped out of that trade, but your loss is minimal here. If you're getting into a short position down here, your loss is going to be a lot bigger because you can't get out of that position until you basically get back above that previous level of resistance. So you have to be kind of looking at these things and kind of taking some risk here and there. And that's how I've been trading. Now, going specifically into what I see happening this week. Now, I've been very clear about this right here. Them pricing in a 75 or 50-point hike, no longer the 1-point hike based on what the Fed has been saying. I want to be very clear. I anticipate this week to be pretty important. Now, we have a few things happening. You have your earnings season coming up. These are your biggest earnings of the week. You have Bank of America on Monday. Goldman Sachs is either on Monday or Tuesday. Netflix, I believe, is happening on Wednesday. I don't want to misquote. I believe we can actually look down here. The 19th is going to be on Tuesday. Sorry. So you have Bank of America, Goldman Sachs on the 18th. Netflix on the 19th. And then we have the big boy, Tesla, coming in on Wednesday, July 20th. So earnings season is here, people. You're going to have some big expectations. So the next 2 weeks are going to set up the market in a very big tone. So if you're not trading at all, I do believe over the next 2 weeks, you are going to get a clear decision whether you're going to start bouncing pretty tough or we're going to start really dropping. Why? Let me get into it. So this week we have earnings coming up. So let me just point out this calendar really quick so you can see. So this week coming up right here, this is all pretty nice earnings coming up. You're going to have more earnings next week. But next week, not this week coming up the 26th and 27th. Why are these dates so important? Sorry, the 27th and 28th. 27th, you have your rate decision, 0.75, 0.5, whatever it may be. The day after, you have your GDP. And 2 GDP results in a row that are negative. This is not me saying it. You can look it up for yourself. Hypothetically, it puts you into a quote-unquote recession after you have 2 quarters of negative GDP. So you're going to have both of those decisions coming in here. Now, I just want to highlight, before we go into that rate decision, it's important to know CPI and inflation has raised to 9.1, the highest levels of inflation in the past 40, 30 years. Absolutely incredible. So what am I looking on this week for Nasdaq? I anticipate you will get a test of these highs up here of around 12.25. I think out of the gate, Monday, Tuesday morning, these will start to push up. I think Bank of America beats Goldman Sachs. I don't really know how they're going to perform. Morgan Stanley beat, JP Morgan missed, so it's hard to say with Goldman Sachs. But Bank of America most likely beats with Citi and how they did. So I think NQ starts to get a push up, tech, and the market most likely rallies. Now, Netflix, I anticipate them missing. I think they're going to continue to hurt. And then Tesla, no idea what they're going to do. Their overall projections were kind of weird this past month, and they didn't actually beat on deliveries for the first time in like 20 quarters. So that's something to be looking at, and Tesla doesn't look that hot, but you can never doubt Elon Musk and whatever they're doing over there at Tesla. So NASDAQ, I'm anticipating a test of 12.2 to 12.25. Now, the big question is if you get above this area. If you start getting above this 12.25, 12.3 area, you're going to start cooking and start pushing towards your next key level. And in my opinion, that's all the way up here, 12.9, locally to about 12.75. And that's a lot of area. That's a lot of area that you're going to be pushing into that's pretty illiquid. So when we go to the 1 hour, I want to highlight and how we're moving here. So when you come back, I think you're going to start pushing up to these key ranges. And again, you have a little bit of resistance here as well. You have some locally, 12.55. You have a little bit in here. But I see you pushing up pretty vigorously back into these key ranges, 12.55, if you get above this key range. Now, let's say earnings don't go as planned and, you have your Fed coming out and saying negative things, which we can never anticipate what the Fed's going to say, because even after one of the worst inflation reports, you have the Fed coming out with one of their strongest overall statements saying that the market's overreacting to the CPI data, which again, I don't know what they're talking about. I'm just giving you what's happening here on the market. So that's what I'm looking at here. So if you break this range of 12.25, I expect 12.5 and 12.75 to 12.8 in a hurry. If you start seeing negative reports here, you're going to start expecting these key levels to get tested once again. And people, these key levels, you can see they respect over and over and over. If you break below this and hold below it, just short it down to the next one. It's just steps and steps and steps. Stop trying to get your home run in one trade. Stop it. That's not how you trade. If you want to trade that way, go ahead. But don't complain on this channel about not getting the information you need, because I'm giving you the information that I am trading on daily. That's why when we go to the Discord, you can come over here and see what these people are making. Even if I'm not performing on the day, even if on Friday, for instance, I hated the trading day. I didn't like it. I missed the overall bounce in the morning, so I just stopped trading. I had one put on Meta. I lost, I think, $80. I got out around, I believe it was like an 8% loss. I got out like 310. Actually less, it was like 315 because I got out even earlier. So that's when I exited that trade. And then I was done trading for the day. I just said I'm done. But people in the Discord, based on this information, based on what we're giving them, they're still making money in this market because we're giving the most key levels. This guy, 4,000 in one day. You would think that's me because his name's Tyler, but apparently another Tyler, the real Tyler. Tesla, this guy, 5,000. Everyone absolutely printing on these days, and they're just going all on these plays and basically what we're talking about here. So I wanted to just highlight, if you're using these key levels and you're trading based on these, I promise you, you will see results. Not financial advice, but just start trading based on these futures. Now SPY, because I know everyone's gonna have questions here. Again, SPY looks lackluster in my opinion in comparison to something like NQ. However, I want to highlight key ranges that you're at. In my opinion, you're not really out of the woodworks here. I still think you're in a level of choppy area. You can still see this range was tough. And I don't know if you're just going to break right through it. But if I'm aiming, I really see this more as your level of resistance. You try to get that breakout at the end of Friday. Upside probably here. If you're looking, I think it's minimal compared to Nasdaq. I mean, maybe, 390 up to 392. You get a break of 392, 393, you're probably going to start filling that gap eventually that you had back at 402. That'd be the most ideal before you start breaking back down. You have previously been filling all those gaps. So make sure you're watching that area at 402. 393 breaks, you're probably going to fill the gap over at 402. That's what I'm looking at there. Going back to VIX. Look at VIX. VIX has been tanking. VIX is one of the best indicators too of seeing how bullish the market is. But I've been telling people in Discord specifically too, be careful if you're trending or consolidating at a resistance and you're sitting here on VIX at this key level of 24. If you go back to the 4-hour chart, look how you've reacted over the past 2-3 months. You come down to this level and you've been bouncing very hard. And when VIX bounce, we know what happens to the market. It typically goes down. But looking at the market now, looking at how this week is setting up, looking at how the Fed is talking, you have to anticipate a little bit of upside unless earnings go bad or unless the Fed comes out and changes their overall stance. DXY, very high, all-time highs made. I think you have a little bit of room possibly as well to come back down and test these previous highs that you had back here. I think it's totally plausible. I think this is all definitely in the works. So I think there's room for upside on this week before GDP. Again, my long-term stance is still downside. My short-term stance has shifted a little bit going into this week based on what's happening if you start breaking over these key levels. Again, look at junk bonds. Junk bonds have been one of the best indicators to see the overall movement on the market. And you've been trading in an overall channel similar to the Nasdaq, similar to SPY. And if you start to get over these key areas, which I want to mention right here, you start getting above these areas on junk bonds and you break out here, you have to start longing some of these plays and you have to start representing the market as possibly in the short term for a bullish bounce. Just a bounce setting up most likely for some more downside and consolidation till you find your overall bottom and filling that gap most likely on junk bonds roughly to 95. So again, the more we look at this, the more it looks like, man, very possible to start bouncing. We look at yields and yields have been kind of hurting. Again, you broke out of that flag and now you've been hurting here. So I'm watching the market and I'm saying, look, fundamentally, I see the downside. I see that we're not respecting and we should be dropping more. I do see it. I can overall acknowledge that. However, if I'm looking at what the Fed is saying, who controls our monetary policy and what's happening in the world, then I have to say, look, short term, I need to start playing this maybe to the upside, representing that going into these earnings, and then repositioning myself and being safe on my portfolio going into GDP and going into that hike and rate decision. That's going to be very big. The one thing I want to talk about before I let you guys out of here was China reporting their GDP here. So China's economy records slowest GDP since the start of 2020. And this isn't saying much because it's starting the start of 2020, but this is pretty big because they're going back to where they were before the whole COVID thing happened and when everyone was stalling out. And I want to say this, and I am the biggest person to say I'm not a huge fan of trading Chinese stocks and anything to do with China because I believe a lot of it's lies and misinformation coming out of the Chinese government. However, what I want to say is they didn't lie to the upside, which was if they would have had a bullish GDP, I would have been like, I don't care. But looking at it on the downside, you're seeing the whole world slow down on growth. You're seeing Europe, you're seeing China. I'm not even going to mention Russia because we're not going to mention them. But everyone's slowing down economically. If you think that the U.S. government and the U.S. economy is the only economy that will not dip or not be affected by inflation or not be affected by growth or not go into a recession, then I think you may be mistaken or you may just be disillusioned by the market. This is very important to me that we're seeing this happen everywhere. It's not just China, but China's the one that just reported on Friday or Thursday, whenever they did. And they're seeing an overall slowdown on growth. We've seen a lot of statements. We've covered a lot of statements from the Fed. And in my opinion, again, these earnings are the tone that's going to be set going into GDP and going into the rate decision of really what's happening with our economy. Now, again, if you're not following on Twitter, I recommend you do so you can always see the updates as I'm posting them every single day and different trade ideas and things like that. For instance, Microsoft, I highlighted this one, highlighted a few other trades as well. So make sure you're checking them out. But again, that's my overall viewpoint here. And that's what I'm really looking at on the economy. I want to go over Bitcoin just for a second and what's happening here. because you have been seeing a bounce, and I have seen a lot of people asking about Bitcoin. Remember a few days ago, I said we're going to hit 20K. You need to break below 20K and hitting 19K. Pretty wild. What I'm looking for here on Bitcoin and what I'll be watching on the week if you are trading Bitcoin. If you don't know, trade on Margex or whatever that, that's the broker that I use. The link may be down below, but if not, anyways, use code Tyler15 when you deposit and you'll get like a big bonus, or I think it's 15%, so you don't pay anything on fees. But on Bitcoin, I want to highlight that this level right here, if you start breaking above 22.5, I think you have room to start really bouncing again. So looking as a whole, you're seeing everything kind of consolidate in this sideways channel, trying to make a bottom. But what I will say, and I know people are going to say down in the comments, it does look like most of these markets are setting up as a massive bear flag on larger time frames. I'm just going to say it. No one else is going to say it. People are going to hate it in the comments. But again, you come in here and you look, the Nasdaq, S&P, all of them, in my opinion, and this could be a little bit rough. Maybe that's a rough drawing. I don't know. People are going to get upset again. But what I'm saying, though, is you are definitely setting up as a bear flag, in my opinion, for possible more downside. See it here as well. People are going to say head and shoulders. I don't really care. Not really my thing. But overall in the market, that's what I'm looking at. Specifically with futures, I think it's very clear what you can see here. And I do think there's a major possibility that we're facing more downside in the longer term aspect. Next week, going into earnings, I think optimism is there and the upside possibility is there. The only thing, though, is a long, broader perspective on the market and what I'd be looking for. Now, if you're trading this week, what would I be liking on the trading side? Let me go over that really quickly. The only earnings play that I'm actually kind of interested in is Netflix. If Netflix starts to break above this range, about 205, me and Jay were talking about it, you probably have a clear run up to around 250. If you get above 250, we also mentioned that you're probably going to get a lot of short positions covering, and you could easily start filling this gap back up to 335. I'm not going to say you hit that next week. I'm just saying that this is primed for liquidity. It isn't that bear flag. It is preparing for more downside. However, if they do have a good outlook, which again, I expect a bad outlook, but if it does surprise, you could see Netflix easily running towards the upside. I'm not looking really to trade Tesla or anything like that. I just don't want to do that. But that's really the only earnings play that I'm kind of interested in, as well as some of these others. If you start to do well on earnings, honestly, all these big stocks, the ones that we've been trading, the ones that we've been following, in my opinion, they have a lot of upside. Meta, back to 172, 171. Microsoft, easily back up to 268. If earnings start performing, you will start moving in a very bullish sense. Apple, look at this thing. This thing breaks back above 152. J-Ream, been mentioning this one to everyone in Discord. Easily back to 165, 163 roughly. So you have momentum. You have the plays there. Just be patient. Wait for some of these signals to come out. Wait for some of these earnings report to set the tone, and then play the trend towards the upside or back towards the downside.